Good evening to all of you, and thank you to Startup Monk and Sivesh for doing such good work. So our topic for today is Convanto's Guide to Pitch Deck. So I just want to tell you that pitch deck is one of the most important things when you look for investments. Uh, I don't, I would appreciate if all the promoters, all the startups that are mentioned here, have come here as audience, take this pitch deck work really seriously. It cannot be taken very lightly because this is the way to present yourself to the investors. So I'll just tell you about Convanto. Uh, Convanto is a small boutique firm. We do a lot of business advisory, we do fundraising, um, we do financial modeling, we do pitch deck making. Apart from this, we do a lot of mentoring. I would appreciate if all of you go to the Convanto page and have a look at all the updates that are mentioned there. Um we handhold startups and help them create the best pitch decks. I'll tell you more about myself. I have worked in Singapore and Jakarta for 15 years in investment banking. And this is my sixth year back in India in investment banking. I run my own firm, and this is my sixth year in India, connected with 175 investors globally. In Jakarta and Singapore, I had my own family office. This is all about myself. Taking today's topic forward, what investors and experts look in a pitch deck. So let's start with the first thing. The first thing itself is, what is your company's purpose or mission and vision? This slide is the first and foremost important slide that really goes where that really holds an importance in your pitch deck. It needs to be short and punchy. We don't need to make it too texty, too bulky with text or images. Uh, the next comes with introducing your team and their track records. Very important part of the pitch deck making is, keeping, having a good team, good co-founders, which have a good track records, because investors typically look at 3 to 4 things. Firstly, they don't spend more than 90 seconds on a deck. Secondly, uh, they look at the founder's background. What is the founder's background, from where they have come? What is it, their track records? Third is, what is the revenue that the company is having? And fourth is the technology. So at least one or two of these things need to be qualified. The third thing is, what is the problem that you are solving? What kind of problem is your startup solving in technology, in basis of in helping the rural areas, urban areas? What is it that it's trying to solve? The fourth is how your product or your business, actually solves the problem. One is, what is the problem it's trying to solve, and how is your technology going to solve the business problems which will be created around your startup. The fifth is the opportunity. Why the iron is hot and the investors should strike now. What opportunity are you giving it to the investors? Why is it your startup so important at this stage? Like, for instance, you can see, if it's a COVID period that has come in, what is the opportunity that you created during this period, which will help the investors also and attract them? This is another thing that you need to look at. Target market and distribution. Always define your target customers, because it's really, really important as to what is your target audience. What is it that you are addressing to your consumers? Where is it going? Which is your target audience? And then comes the total addressable market. You have to show how you have calculated the market. Have you done some research on your product? Was there any market research before you started your startup? Has it been in the industry for 2-3 years? So this is a very important 7 to 8 points that you need to take it into consideration. The next is product, key features, and the all important demo. So what is the product? If you have a product demo based in a form of a video, it really helps the investors to solve the problem. It's always better to have a video presentation. Next is the key features, and most importantly, demo of your product. It's always good to have a video demo of the product. It helps the investors to understand what is your product. If you look at videos, even children, they understand better with visuals. It's the same with adults and investors. If you put any visuals, if you put something in a video format, it is always appreciated. Then comes the business models. How are you going to make the people give up their hard-earned money? If you understand that all the funds, all the investors that are investing in your startup, it is somewhere their hard-earned money which they have collected, and that is they are using some of it to invest in your company. So how is it how are you going to make them believe that your idea or your startup or the idea that you are bringing in is going to really help the investor as well as you? So when the investor invests in your startup, what is it that he is or she is going to get? Then comes the competition. Is it important to, very, very important to show a perpetual map on how your position compared to your rivals? So if you don't know who are your competitors, whom are you competing with, what is your market around, what competition is there in the market, it's also a backfall for you, because investors have already studied the market. When you present an idea to them, they already know the kind of competitors that are there for any technology startup or any other startup. So it's better if you also understand who are your competitors, or is it a unique idea? Then comes seed and traction. So whether you are at the seed stage or you have made any traction, or you are going to get some traction in the next coming months, you need to really show that to the investors. Because if you are going to just show that you are taking the money to burn it, or you're just not showing any traction, any investor would not like to come in at that stage. Then is the pre-seed stage, which is a 5-year plan, which includes strategic plans for your startup. Now, you need to have a 5-year plan for your startup that will help you show the investors that, look, I'm going to reach at this stage in the next 5 years, or I'm going to reach at this stage in the next 5 years, and this is my plan. If you don't have a plan for the next 5 years, what is your goal? What are your goals in the next 5 years? Definitely, you're going to have a fallback, because it is always good to plan yourself and plan your company. Then comes the fund usage. How much you are raising, what will be the fund spent on? I have seen many decks where people forget to put what is the usage of the fund and how much funds they are raising, and what is the kind of raise they are looking at. Are they looking at CCDs? Are they looking at equity investments? That you need to clarify to the investor in the fund usage slide, because many promoters forget to clarify these points, and hence it confuses the investor also. It is very important to give an exit strategy for the investors as to what will be the exit strategy for them, so that what are they getting in future when they are coming into your company. If you don't put that on your decks, many people forget to put exit strategies for investors. What will entice the investors if they don't see what kind of exit they are getting? Now, let's come to how you're going to structure your deck in a very grabbing attention manner, so that it gauges the attention of the investor. It's very important. Sometimes I have seen events where I'm the judge and I'm judging these pitch decks, and I see that the companies are unable to grab attention of the audience. So it's very important that you need to grab your audience attention. It's not very easy to find a way to establish attention and excitement. Hence, you have to tell a story around it. What is the story? What is the idea that you have created? For instance, describing the problem and the solution. What problem does your company solve? Pitching PowerPoint presentations is always showing about that what problem you have solved that needs help, that needs your help. How you have solved a problem in the system, which only you can do and nobody else. And explain the market. How widespread is the problem that you are solving? Is how widespread it is in the market. Is it in explain in numbers? Is it in comes under how many billion people? What is the problem that you are going to solve? Investors need to understand the total addressable market, or the potential number of customers you are seeking to serve. This is really, really important, because if you cannot explain the kind of market you are looking at, you will have a fallback. And be open to make an ask. Investors appreciate whether you are pitching the event live or your pitch deck live. It's always good to make an ask whether what kind of funding, whether it's what kind of teammates you will have, what kind of presentation you're going to have, and what is the support that you need to grow. If you don't ask, make an ask like, this is what I need the funds for, the investor will not understand what you're trying to convey. Then comes that how to make your design and infographics better. This slide is very, very important and useful, because the way you design your slide, whether you use the kind of graphics, whether you have used a video presentation. Nowadays, the video presentation is in. So most of the investors, when you attach your information on the email with the pitch deck, with your teaser, do attach a YouTube presentation, which is a short presentation where you are explaining your idea, your ask, and everything around it. It really helps well. Try to design your template in the right manner. Use a business pitch template and not any other kind of template, and design it in the right manner. Use infographics, illustrate your key processes, show some visuals wherever you can, show graphs, bar charts, and also it would be nice if you show it more as numeric and not as texty and heavy. So investors don't have time to go through a heavy text. They prefer showing them numbers. So add a SWOT slide for visual strategies, so that you can it analyzes your and highlights your strengths, weakness, opportunities, and the threats around the startup that might have. Then comes that these are some more tips that will help you develop your pitch deck in the right manner. See, you always need to have a business plan or a unit metrics in place. It is a one-pager document with numbers which explains everything about your company in a one pager. If you might understand that investors main slide is the number slide. So if you have this number slide in order, uh, it is better to present the unit metrics or business plan in the first few slides, where the numbers are concerned. And this should include your revenues, your exit strategies, and the type of investment, whether it's a equity or a debt or a CCD, what you're looking at. Many a times the startups and the companies, they don't specify whether it is an equity or is it a debt or is it a CCD that they want. So the investors don't know what kind of investments that you are looking at. Video presentations, like I mentioned earlier, are in the market. Any kind of video presentation works much better than a normal pitch deck, because it's an few seconds or a minute's presentation wherein you can explain everything about your company. So if you don't have one, start making one as soon as possible, and a business plan, and may put your things in order so that you can pitch it in the right manner. What is the kind of language you should explain everything in the presentation, in a layman's language. What happens is that I have seen companies that use heavy technological words, they have heavy terms which the investors also might not understand. Just use simple layman language. Explain your deal in a simple form that anybody can understand. You don't need to use very high technological terms. Just use simple layman terms and a small nice video with a one-page business metrics. Keep it brief, keep it to the point, make it really interesting. Make your presentation and explanations smooth like a story. And do not take much time to help them understand. Like I have seen, when people are sharing their pitch decks, they take a lot of time in explaining. Say for instance, it's a health tech startup, and the person had some health issues which made him or her go for this health tech startup. They start explaining their health problems. It's not important. Just keep it brief, to the point and interesting. Explain the information. Don't linger on the slide for very long, because then people tend to lose focus. And anticipation of what questions can be asked, and answer them way ahead of time. Then comes some do's and don'ts that I have formed here. This will help you make your pitch deck really short, well explained, and catching to the eye. So the do's are, keep it clear, concise. Your pitch deck should effectively communicate the idea to the investors. Having a storyline is the key. What is your storyline? Make it interesting. The first flow slides are really important. They should be made in such a way which captures the investors' interest and attention towards the business, or else they will lose their interest. So make it really interesting, and if possible, make it interactive. That always works well. Formatting is important. In many pitch decks, I have seen spelling mistakes, grammar mistakes, and alignments not done in the right manner. So using the right kind of fonts and colors, which should be pleasing to the eye. And the don'ts are that don't forget really important slides. One is the investors will keep out looking for slides like your team, what is your market size, what is the traction. Make sure you include them in your pitch deck, and that is the thing that you keep highlighting. Don't make it too texty. Like I said before, nobody has the time to read large amounts of text. Keep it short, keep it simple. Not only that, keep it more numeric. Make it more numeric than texty. That will really help you with flow charts, with graphs. Uh, don't give away all the information in the deck itself. It's important to create what next thing in the mind of the investor so that they contact you. So leave a bit of the information, and so that they can really get in touch with you to find out more about it. Then you'll actually understand whether they are interested in your company, because they'll come back to you with a question. So keep it that way. This is I have taken an example of a business model. If you see, it is small, tiny, and it explains the numbers in the right manner. I have taken this example to show you that how the numbering and the graphs and everything is explained, uh, uh, and how it is done in a small one slide where the investor can really understand uh, what you are looking at. I'll allow you to spend some time on this slide and see that how the numbering is done. If you see the projected orders, the average ticket size, the revenue, it is all done in a very neat manner and in a nice graphic style. This is the fund usage slide that I was talking about. If you look at it, if you see it, you'll understand that how well it is explained, that on the technology, how much they would be spending on the marketing, how much they would be spending on operations, how much they are spending on the team, and what are the other miscellaneous costs, and how they have aligned it in the right manner. Whether it is technology, they have made 3-4 points here. If you see new development, what would be the maintenance cost? If you are making an app, what is the cost of that? If you look at the marketing area, what is the marketing cost that this slide is showing? How much they have spent on influencers, how much they want to spend on content, and how much they want to spend on affiliate marketing, etc. So this slide is really important, and I would highly recommend to make your fund usage slide like this. Let's go to the operations. If you see that, how they have classified that the 20% that they are spending on the operation, 30% is on products, warehousing, logistics. They have divided it in the right manner, which is pleasing to the investor's eye. And if anybody looks at it, immediately understands what's the promoter is trying to convey. Then, if you remember, I had mentioned about the business metrics or the key metrics slide. This is one example that I have taken. If you see this slide, you will understand deeper as to how in one pager, the entire business metrics of the company has been explained, with the revenue flow, with the GMP, what is the customer usage here, the average session and duration as well, the organic traffic, the direct traffic, and everything is explained from July to September and October to December. So this slide of key metrics is very important. I would recommend all the startups here to have this slide in your pitch deck always. And that's about it. So if you guys have any questions, I'm happy to take it forward.
I guess that they will be having a lot of questions, because every person who ever registers their startup is always looking for fundraising. So
Yes,
guys,
yes.
you can ask it into some people have asked it into the chat box. I will advise you to ask onto uh, the link which is provided by I use Slido, so I can share that link and further brought it into the screen and we can discuss it here.
Yeah,
As of
sure.
now, there is no questions out there. So ask people if you have any question because we have an investor out here. So nobody will be better person to answer your question than the
Yeah,
investor herself. So ask
yeah,
as much question as you can, and we are waiting for it. So the
yeah,
first question is from Durgesh, which is like how I get investors for my pharmaceutical company. So
hmm.
Banna, if you want to take it further, I will add how I get investor for my pharmaceutical company is the question out there.
Okay, okay. Hi, Durgesh. How are you? So, um, how to get investors for your pharmaceutical companies? The first thing is, have you made a pitch deck? What kind of pharmaceutical company it is? And what is the technology that you have developed around it? Once you have your pitch deck in order, then you have to target, show it to somebody, show it to a mentor, show it to somebody who understands pitch decks well. Let them approve your pitch deck. Once they have approved your pitch deck, you have to target all health tech or healthcare investors, keeping the ticket size in mind. What is the ticket size they invest in? What is the investment that you are looking at? And then target those kind of investors. Sivesh, correct me if I have missed out something.
That's okay. So, Durgesh, the thing is that first you need to identify the investors who are investing into your domain, that is
Yeah,
pharmaceutical. Once you have identified, then you need to understand at what stage you are going to ask for the funding. Is it going to be a seed stage that you are just starting up or an angel stage? So,
yeah,
accordingly, you need to prepare the pitch deck as uh, Vanna just told you during the session how to prepare a pitch deck. You need to accordingly work on the pitch deck and prepare a pitch deck. Then you need to investor which was shortlisted initially, which were invested into pharmaceutical industry, then start reaching out to them. There are a lot of ways to reach out to investors. I guess last week's session, which was taken by Tushar, uh, he mentioned into that session. The video is also there onto the YouTube. We have recorded it and shared on the YouTube, so you can go and check there the last session. So there are process how to reach out to an investor. Start reaching out to them. There will be like uh, what I will say that if you are starting as of now, you are going to face like maximum failures or when you are reaching to investors. But over a period of time, you will. It will come to you that what all they are looking for, how to reach to them. So consider that out of 10, only two investors will be interested. So this is like the thumb rule. So be ready for that. There will be a lot of rejection, but this is how things need to be done. And this is how things take place into startup ecosystem. And
yeah,
as Banna also mentioned that uh, get your pitch deck, share your pitch deck with somebody, a mentor or a person who is like senior into the industry, because it is always good to have a second eye for your pitch deck. Try to avoid any grammatical mistakes there, or try to put any wrong numbers out there. Try to avoid those things. And apart from that, also I always advise startup founders or early stage entrepreneur to get your pitch deck prepared by somebody,
hmm,
because if you are going to raise a fund of anything between 50 lakh to like 1 crore rupees at the angel stage, so investing like 10 to 20,000 rupees into getting the right pitch deck is not a bad idea. It is always advisable, because they are going to, these professionals create a perfect pitch deck for you, and they will do some of the research of the numbers and all. So invest that much money, and then I think you can start looking for the investors.
Sivesh is very right here that make your pitch deck with the help of a professional who has done the work before, because they always know the market trends and what best they can do for you. Don't try to do it yourself if you don't have the idea. I totally agree with Sivesh that start looking for investors, but also keep in mind that look for the right kind of investors. Like if you are at seed stage, you need to look for angels. If you are at a second stage, then you need to look for VCs. So if you are just targeting the wrong investors, then of course you'll have a backfall there.
And also, there are, I don't know the, because people in the session are generally the first time founders and early stage entrepreneurs. Every investor have their mandate or thesis, you can say, or the philosophy
Yeah.
of investment. So you need to understand that. Generally, it is there onto their website that, okay, they are going to invest in such and such type of startups. But if it is not there, try to research a bit and try to see what is the trend in which they are investing. Because if they are investing into startups which are founded only by the people from IITs and IIM, so they are going to invest like that only. So instead of knocking their doors, I think you can use that time in looking for some other investors. So do some research. Being as a founder, as an early stage entrepreneur, it is your main job to do research before stepping into anything. So do that
Yeah.
research.
Yeah, that's right.
Okay, I have one question.
Yeah.
Yeah.
Yeah,
Okay.
good evening. So, okay, let's see. Suppose I need to develop a pitch desk and I'm going to hire a consultant. So, what all things I can tell them? Okay, I know my product, what I'm going to do. So, including that product details, what all things I need to tell them to develop the good pitch desk? And again, one more thing, what is the guarantee that the idea which is I am going to share with the consultant is not going to used by others?
Okay, Banna, let me just do this, and then you can add over it.
Sure,
Because
sure, sure. Please.
uh,
That is
uh,
really better.
yeah, so the thing is that whenever you are going to sign, what we do as a pitch deck maker, because we also uh, prepare pitch deck for startup founders in Startup Mom. Though it is not like our main thing, but we do, and on an average, we make somewhere around 5 to 6 pitch deck per month. So we signed NDA. NDA is like non-disclosure agreement. So if even we asked you to sign NDA from your side also, because we will be providing samples of pitch deck to you, which you are going to see and tell me what all you require into your startup. So NDA is signed from both the parties, the founder as well as the person, the consultant who is preparing pitch deck, and that is a legal binding document. So, in case if the person is going to use, or you come to know that he is using your pitch deck, or he is using your idea, or diverting in some other place, you can always sue that person. Said that. Uh, don't worry about getting your idea get copied or stolen, because it doesn't work like that. It is
Yeah.
99% it will be execution, until and unless you are making the next Facebook or Tesla or SpaceX. Nobody is going to steal your idea. So don't worry
No,
about that. It is one of the most innocent thing that I hear into startup ecosystem, that people think that their ideas will get stolen. It won't. If you think that your idea is unique, just go and Google it. You will find at least 10 people who have already executing the idea, and 50 who are working on it. So it goes like that. But yeah, to have a, like you can say, a legal bind over it, you can sign an NDA with them, and this is generally all pitch deck makers do. This is a common practice that we do, that we sign the non-declaration agreement with the founders, so that they also have confidence in us. And Bandhana,
uh,
you can take it further.
Yeah, yeah. Sivesh is correct. Nobody is there to copy the idea. I mean, so you don't have to take out that fear that somebody is copying me. Whatever is your thing will come to you, and whatever is the other person doing will go to them also. You don't have to really worry. There is lot of competition in the market. You just have to, be a hustler, strive it out, and if your idea is the best, it will naturally gain presence in the market. So you don't have to worry about that. And it is always best to hire a professional. The professional will give you a set of questions that you need to answer, and give it to them, and then they will formulate, and as in when the slide is ready, they will get in touch with you that this much work is done. Now these are our next set of questions. So professionals work in the right manner. Always go with a professional, then get it show it to somebody who is expert in it, and then take it forward.
Suppose that
excellent.
suppose you are raising 1 crore rupees, so 20,000 rupees that you will invest into your pitch deck will be what? 0.02%. So I think that much you can spend over it.
Yeah,
So
yeah.
yeah.
And I have also seen promoters, they don't want to spend on their pitch decks. They feel, what is it? It's just a document. No, it is not that.
Yes.
A pitch deck is your whole business information memorandum that stays with you for a very, very long time. It's not only to pitch to the investors, it is also, uh, for it's a good thing to have it for even business purposes, because it explains everything about your company, and for you also to go back to it and to see that, oh, where what is missing, where it is a really good thing to have. And it is worth it to spend on pitch decks and make your pitch deck the most presentable, because it really helps you to not only to get investments but also to get good business.
Perfect.
Thanks for answering. Actually, I was not sure about the non-disclosure agreement. We can do it. So thank you very much for telling
Yeah.
me this one.
Great, great. Thank you. So I let's move on to the question. The next question is for you, especially Bandna, because it started with ma'am. So I think you should answer it. Ma'am, is it a good idea to go for funding even before having an MVP? You answer, then I will just put my thoughts into it.
So I'll tell you, like I mentioned before, investors look at three things. One is the founder's background, one is the kind of technology that you have built, and if there is any revenue or not. I have seen a company, I'm not going to name it, that the founder's background was strong. He had two other companies, and then a small technology company that he came up with did not have technology, wasn't launched. There was no revenue in it. It was totally a new company, but it got funded. It got funded because of the founder's background. So sometimes these things also help to get you funded. Of course, if your technology that you are bringing in, or the your company is really something unique that is coming up in the market, it will get funded. But it cannot be just anything in the air. There has to be some, I have seen that people coming with like apps which really don't help in any way. So of course you have to do a lot of research as to how you're going to get the investor to invest even before MVP. What is it that you have solved? What is the problem that you have solved? That the investor will say, okay, look, I'm going to give you this initial funding for your investments, and so that you can take a plunge further and grow it further.
Okay. So, as already beautifully mentioned by Vandana, that the background of founder matters a lot when it comes to investment before the MVP stage. Because at uh, when, when it comes to investment, for me, if it is at an idea stage, I am never going to invest into any startup. But if Kunal Saab comes and say, okay, I am having an idea, I will say, okay, take my $100 million, because he is Kunal Shah. He have proved himself in the past, and this happened with him with Cred. When he came up with the idea of Cred, without even naming the product, he only said that, okay, I am planning on a product which will be something like payment for the credit card and
Yeah.
collecting the data or financial data of the consumers or the user of my app. And there were investors who are ready to invest like $50 million or $100 million into his idea, even without the name of the app at that point of time.
Yeah. Yeah.
So this is a lot depend on the credibility of the founder, if he is a serial entrepreneur. If not, my philosophy of investment is always like the whether it is a tech or non-tech, whether it is have the market potential or not, or market growth or market potential or not. And third is the revenue. So this is how it comes. If it is a non-tech startup, then until and unless it is like have a potential growth or and having some revenue, I am not going to put the money into it. if it is a technology which have like huge market potential, and even if it is at MVP stage, not also MVP, even the prototype is ready, the beta version is ready, I am
Yeah.
most probably can invest into that. Generally, prototyping is like the step which is before MVP. So one can step, and investment take place at prototype stage and beta testing stage. So investment take place into startup ecosystem, but for that you need to be a tech startup. So it is like a criteria out there. If it is tech, you can get invested before MVP also, but not at the idea stage. Just like, okay, I am thinking about this and I have created a Facebook page or Insta page. It is not like these are like
Yeah.
vanity matrices, and it doesn't work. And so the I think you might be a bit clearer of the answer out here, that okay, you can get, but if it is tech and you have created the prototype of beta testing.
Yeah.
So, and you will find a lot more about these topic and question on our YouTube channel, so you can go and check that also. So let me mark that this question done. Second question is, ma'am, what do you prefer to create a pitch deck? I think we already answered this question. It is
Yeah.
always better to get it done by an
By
expert.
the
It is
experts.
also like visually appealing. It will be like appealing to your eye. It will be more catchy with their graphic and everything, and it will be done in a better way because they are expert. It is like their bread and butter for when it comes to
And
prevailing.
it's like see, a pitch deck maker is good at that. It is their work, so give
Yeah.
it to them. Investment banker is good at that, their work, so give it to them. You will be good at doing something. So everybody has their own skill sets and areas, so utilize that.
So I think I was talking to Ankur Wariko. He is, you might all might be knowing.
Yeah.
He's quite,
Yeah.
quite
Yeah.
he's an influencer onto LinkedIn as well as on Instagram. Also, he created 100K. So he told a very good thing about founders, that the founder, just to save money, founders forget that they will be investing much more time, much more money into it, and additional they will be getting a disappointment, and there will
Yeah.
be reputation risk for them. So it happens, instead of wasting more time and everything, or by trying to do it yourself, you can always put that money, give it to somebody else, and let them do it. Always
And
a good idea.
let's not be penny wise, pound foolish. You'll be doing the same thing again and again. This is another thing that, just pay and smile and get your work done in the best manner and relieve yourself from the burden. That is, and focus on bootstrapping or something else. So it will also help you move faster. Otherwise, it's just going to take longer because naturally your pitch deck is not appreciated, or there is something else that might be going wrong. You must have put the numbers too high. The pitch deck maker can guide you for all these things.
So the next question is a good one. What is elevator pitch? It is a part of the pitch like in the 10-15 slide or something else. I think Banda, you till then I will add on.
Okay, thank you, Sivesh. But you can also go ahead. I can
So
always
let me
add
let me
on.
go. Elevator.
So, see, elevator pitch and a pitch is the same thing. It is not something, it's just a fancy name. We these names are added so that it makes it sound more attractive and makes it sound like more professional. Uh, any pitch deck shouldn't be more than 10 to 15 slides. You're right about that. Don't make it too texty, make it more numeric, make it short, crisp, and in a layman's language, explain everything. So, I think, Sivesh, you take it forward the rest.
Okay, so what is elevator pitch? When we talk about elevator pitch, it is the term was started by Steve Jobs basically. So
Yeah,
when he used to work, when he was before getting fired from Apple, so to get anything approved from Steve Jobs, you need to catch him into elevator, and you used to get 1 minute time from the ground floor to reaching to his floor where he used to sit into her. In that 1 minute, you have to define everything and get the approval from Steve Jobs to work on any project and all. So elevator pitch started from that. So now it came into startup ecosystem, and I think it was popularly brought in by YC, the Y Combinator. So they brought in the same concept into a startup ecosystem. So you need to define your entire pitch deck into 2 lines. That is elevator pitch, into 30 seconds or 1 minute. So we have an entire video over elevator pitch into our basic of fundraising course, and we collaborated with Wharton School of Business. So the professor out from there has defined the entire process, how to even you can put a elevator pitch into a single line also, how to write it into a mail also. It is generally created for people for networking events. Suppose you went for a investors meet, so a lot of investors are there, and you need to have their attention into, like, you need to just speak 2 lines and need to get their attention. Their elevator pitches come in handy. So you need to create a pitch where you are going to tell what your product is, what the market size is, and how you are going to tackle it, all three things into one single line. So that is elevator pitch, and that is that you I will advise you to purchase the basic of fundraising. I know I am selling it again, but it is like not too expensive. It is somewhere around $497 if I am not wrong. Ayush can share the link. So there we have a special video over it only, how to create a pitch deck, how to articulate it, so that even if you are traveling in a metro and you find a investor out there, you can pitch it into 1 line. So this is what elevator pitch exactly is, and it is like if you can do it like in the right manner, it comes out beautifully. And I have tried it. I have pitched to people into what to subject line of email. So this is something what elevator pitch is.
Subject line should be very
Yeah.
catchy. Yeah.
So I prepared the elevator pitch for one of my startups portfolio startups product, and I put the subject line into, and into the subject, dear such and such investor's name, for further detail, we would like to meet you or have a call with you. Please advise on a time. That's all, and we got the call. So this is how investor pitch works, and it is if you can work really well on it, it is a beautiful thing to have for your startup. What is the best way to find market size? Let me start, then I will pass on to Vandana. There are two ways of market sizing. One is the top to bottom. Second is the bottom to top. For big for product which are like expensive and whose shelf life is high, for them the top to bottom approach is done. For products which are like shelf life is low, like you can say burger, fast food, or vegetable and all, for them bottom to top approach of market sizing is done. And it is part of our idea validation workshop. You can find that we have also Excel sheet with the formulas and everything out there, so you can market size it. So this is how it is done, and there are two ways. It will depend on your product or services that you are offering, whether the market size is like high or the expenses are, and then you can accordingly to the market size. Bandna, to you.
Yeah, Sivesh is absolutely right. The other way is also that there are a lot of market analysis that are sitting there as freelancers also, who help you do a total market research on how to find your market size. So you can even take their help. But as rightly Sivesh said, that these are the few tips that you can get to find your market size. Totally agree with Sivesh here.
Okay, the next question is how to calculate a startup valuation of minimal traction while asking for investment on equity. Okay, there are technical ways of finding the valuation, and I think Banna is one of the expert out there also, because she comes from that background where she can really help you with valuation of your startup. Generally, merchant bankers or CAs do the evaluation of the startup with after calculating all the numbers and all. I avoid going to CAs because they have a completely different mindset, and they still, in India at least, they are unable to get the feel of startup ecosystem. So when it comes to anything finances related to startups, I avoid going to CA. Rather go to some banker. They are the best person to advise you because they know what goes into startup ecosystem and all. Said that, there is a framework that we have created as an serial entrepreneurs or as an you can say investors, early stage investors, we have created a framework. So we consider like 3 4 categories, things on which we value the startup again, which is like tech or non-tech, is there the growth is there or not, growth is there, and revenue is there or not. So as per that, we have created a complete chart, and accordingly we have put how to value your startup. And it is one of the main thing when you are like pitching in front of the investors, because if you have seen this Shark Tanks, which is like an investment a series which goes on Netflix, and it is an ABC studio series. 95% of time, I will say, investors gets pissed off because you have valued your company in the wrong way. I was sitting in an investment pitch out there. It was like money on that table, and it was like proper investment pitch. It was not like a college investment pitch. And there a startup came and they valued themselves like $10 million without a single penny of revenue into their account. So which was like an absurd. And I was like, okay, I am done. You can ask them to go further. Bandana, being an expert, you can add on to it.
Yeah, totally agree with what Sivesh is saying, and he's fully, understood your question and answered it well. I always tell my startups that not to box yourself in by giving in your valuation way beforehand. So keep it, let the investor throw some figures, then you start negotiating. What many people do is they start throwing their valuation beforehand, and that's where they get a fallback. So I would highly recommend not to do that. Second thing is there are lots of professional people who get you a valuation certificate. If you really want to get it done, then you can use them and get your valuation certificate done. But in the beginning, when you start seeking investments, it's really not required. It comes at a much later stage. And like Sivesh rightly said, that a CA is not, might not know the correct market trend, how to do it, because they are very traditional in their approach. So go to a banker who would help you with the latest market trends. And deals do fail because, in promoters box themselves in by giving a valuation that my company is these many $1 million valued, but how did they calculate, how did they come to that figure? So don't box yourself in at a very early stage. Give it time for the investor to throw some figures, then negotiate around it and come on the same page.
And what should be the ideal time size for a video pitch deck? I mean, how long the video should be? Banda.
So see, any video pitch should not be more than 3 minutes. Investors don't have time even looking at the video pitches for so long. Make it short, sweet, and explaining what exactly you're trying to do. What is it that you're looking at? When you also make a video pitch, make sure that you have presented yourself in the right manner. You cannot wear a casual clothes and make a video pitch and present it. Just make sure that you're formally well dressed when you're presenting it to the investor, and the video pitch should be only 3 minutes, not more than that. That is my first suggestion. Sivesh, what is your thoughts over it?
I think 3 minutes is will be ideal. I will advise anything between 2 to 3 minutes, considering
Yeah.
the numbers will be there. So 3 minutes will be ideal, because on an average, if we talk about the presentation mode of the slide, where it automatically changes the slide,
Yeah.
it is 5 seconds. And an average something between 13 to 15 or 16 slides are there in an pitch deck. So it will be somewhere around 80 minutes, 1.5 minutes. But being you are speaking, and we will be throwing in some numbers also, which will be like the traction numbers or the revenue numbers and all. So anything between 2 minutes to 3 minutes will be ideal, not more than 3 minutes, because
Yeah.
it will be like a bit of boring. Also, it will create a lot of gaps into the video if it will be more than that. Make it like crisp, make it like brief and crisp, so that it conveys your message across
And
to the.
also, if there are three founders, all the three founders should have spoken on the video pitch deck.
Yeah, that
Not
is
only
also.
just one founder speaking all the time. All the three founders should have had equal chance to speak. What is their area? What is the second co-founder's area, and the third, and so on.
So
Yes.
having all the founders present for the pitch is like really important. And as if you are creating a video, if there are three founders, try to have some part of all the founders and what they think about this startup and all integrated into it.
Yes. Yes.
Okay, so the next, can you share some sample template of terms? I think it is onto the Startup Monk website or my personal website. We have uploaded somewhere. You can ask Ayush for it, and we will share. It is somewhere online. We have created it, so you can download it from there. Just ask Ayush, and he will provide you with the link. The next question, while preparing the pitch, we divided use of funds in categories like marketing and operation, but not subdivided further as you so. Is it required? Banna, your question.
Yes, it is required. It is important that you subdivide it further, show it exactly the way I had, done it. It will help you only to present yourself better. I mean, of course, it's not like a hard and fast rule there that you have to do it this way or that way. What I showed you is just a way that will give you more presence in with the investors. So I think it's better if you keep subdivide it, but keep it short, and don't like make it look like too long, and just in short, the investor understands these kind of slides very well and very fast.
Perfect. I think that's the perfect answer for it, because investors need to know where you are going to spend their money.
Yeah,
It is
yeah,
always better to give them as much information as you can to where you are going to spend their money. When you invest into a startup, it is not liquid cash. You can't just invest and after 6 months will say, okay, I want to take my money out.
no, you
So
can't. Yeah,
when investor are putting their money into any startup, it is like blocking for next 5 to 10 years.
yeah,
Until and unless there will be an acquisition, merger, or acquisition, or IPO, or like an other existing or a sellout, you are not going to get, the investors are not going to get their money back. These are the major things. So their money are like stuck there. So it will be really good that investors know where their money are going into, so that they understand, okay, even after 5 years of time, these guys are on the right track by investing such and such into like digital media marketing, into email campaigns, or into like BTL, what we call below the line marketing, or OTL, above the line marketing and all. So you need to understand that it will only create a confidence into the investors mind, and that is always good, having confidence of the investors.
yeah, yeah. I totally agree with that. See, it's like say you have a child and you're giving your child 1,000 rupees as a pocket money, but after some time, as a parent, you would want to know what exactly they spent it on. Not because you want to actually like control them on thing, but just so that it's not burning anywhere else, and they are utilizing it in the right manner. So it's the same thing. Yeah, it's investors hard earned money which they have earned for several years of being in the industry. Naturally, if they are putting into their into your startup, they would want to know what kind of returns they are getting, or whether it's being used to just burn it up. So it's very important to show your slides in the right manner.
Because once you will they will invest the money, monthly you will have to submit a report to them.
Yeah,
So this is something that people don't know, but every month you have to create an Excel sheet and you have to submit to the investors that what you are doing with the money. So these are the things which are really going to piss off the founders. So the best example is Rahul Yadav, housing.com.
hmm,
So,
hmm.
yes, it is a good idea. Okay, the last question. As a sports startup, need to know whether VCs are really need in investing in on sports, which will have a less technology innovation, but technology usage is more.
Mhm.
Uh, one of these sports startup into my portfolio. I took them into my acceleration program as of now, and I think that investors are showing interest into investing into a sports startup. So yes, they are not completely technological innovation, but they are using technology for data crunching and all, to making the sports facility better, and the it is more like an analytical analytics company. So investors are getting interested into it. So I know about it, so that there are chances of getting funding. Rest I will leave it on Vandana.
Yes, yes, definitely. Sports startups are getting funded, and but also depends on what kind of sports startup you have, whether it has a tech component or no. What is the problem that you are going to solve? So, if what kind of sports startup it is, that also depends on whether you'll get investments or not. But definitely, investments are happening in all sectors: sports, agri-tech, fintech, edutech, anything deep tech, all kinds of investments are happening.
Okay, so the question here are done. We have two, three questions there, so we can take it quickly because there are not much question into the chat box. And
Sure, sure.
what can be better option? Company shares based agreement or equity based? Okay, company share based. I think Banna, if you can understand this question,
I
what
think
can
what
be better option? Company share based agreement or equity based?
I think what I if please correct me if I've understood the question wrong. It is going to be an equity investment, and that is why we are discussing pitch decks here. And this forum is there to discuss equity investments. Hence, I think I've answered your question that it has to be an equity kind of investment. And what agreement you're talking about, I didn't understand. So.
Company share based agreement, I think he's more talking about IPO kind of thing.
Uh, that will come much later, depending
Then
on uh, the
that will
kind
be
of.
like 5 year, 10 year diagram.
He's saying, got my point, I think.
I think he got his point.
All right. Thank you, Durgesh.
Proprietorship firms cannot get funded. Yes, it is right.
Yeah, that's right.
Proprietorship funds cannot get funded because the liability is too much out there, and the liability is on the founders itself, the proprietors. So that's why investor never invest into companies which are which are registered as proprietor. 99% of chances are from the private limited companies, though I have seen one or two cases where they have invested into LLPs, but that is like one or two cases only I have seen, but maximum it is private limited companies.
Yeah.
So proprietorship companies are not. Private limited can be formed post funding.
No,
No,
no, no.
no, no, it cannot.
Cannot.
You need to have a private limited company with two directors minimum. Then only you investor is going to invest into firm. These are some what you said. These are some legal legal steps which investor take to make their investment secure. So that's why
Yeah.
private limited you need to get it before funding only, and it is not like expensive. It is only cost you somewhere 7,500 rupees to 8,000 rupees to get all the documents and everything registered at the private limited company. I think that is done for the day. Banna, thanks a lot for
Thank
coming
you,
and
Savi.
sharing your
Yeah.
knowledge with the startup ecosystem. I
Yeah.
know the numbers were not much. The maximum that Gobi got was 38, but
No problem.
as
No
it is
problem.
just Saturday evening, so
Yeah.
might be possible. And again, it is like quite chilly nowadays, so nobody want to sit in front of the camera computer like between 5 to 6. So thank you again,
No
and
problem. No problem.
I will
Anytime.
reach out to you personally.
Thank you so much for a wonderful audience. And thank you, Sivesh, for wonderful insights and calling me here. Happy to be here at Startup Monk. And I would recommend everybody here to come on such platforms and get your questions answered. Don't be afraid to ask questions. Uh, if you are curious only, then you can, make your startup one of the best ones. I saw Ayush typing thank you. So thank you, Ayush, too. And thank you, Sivesh. And thank you, everybody.
Thank you, guys.
Bye, guys.